this short-term price correction definitely is driving my interest. I mean, what's causing it? When I look at Bitcoin, everything was looking great. There's a lot of momentum, but I think this is just a healthy consolidation. We had an amazing 2023. This year, we're still up over 40%. It's really healthy to have a price correction and some consolidation that's occurred, especially like during previous all-time highs or right around previous all-time highs. You typically see this churn. So it's like, what's causing the selling? Well, it could be a number of things, but on-chain data shows us that this is actually long-term holders that are likely taking profit, or maybe they've been holding positions underwater for a long time and now they're getting out now that the all-time high has been breached again. And so we're seeing this pullback in the sell pressure from long-term holders. Also, it could be from miners after the halving. They built up this war chest to survive post-halving when their revenues get cut in half, and they've seen Bitcoin's price move sideways at that exact time. So what's happening is they're selling off some of their Bitcoin holdings to try to survive this little short-term winter so that when Bitcoin's price rises again, they can improve their profitability. The last thing is that the ETF outflows that are occurring. You had a lot of increased demand for these ETFs in the first half of this year, and a lot of it was coming from hedge funds who are putting on this certain trade. This is kind of like letting up potentially. We can get into that, but those are three things that I'm looking at that could be potential drivers of this short-term price correction.
Now, a lot to get into there, but I want to ask your opinions on Marcus Thielen's remarks that I just read. Now, Marcus Thielen has been a recurring guest on this show. His predictions are often correct. I will give him that. He says that Bitcoin could be heading to the $50,000 mark or even $40,000 mark. What do you think?
The only reason that might happen in my mind is if there's some kind of broader macroeconomic, event that occurs where it leads to a cascading kind of credit event or contagion, or equities start to fall, everything starts to fall, all the correlations go to one, and Bitcoin gets wrapped up in that mess. That's how I see it getting down to that level. But honestly, right now, it's pretty par for the course when you look at bull markets. Usually there are multiple 20% drawdowns during bull markets before it continues on. Like I said, it's people taking profit, taking some chips off the table. It's normal to have this kind of price consolidation, and it can get down to minus 20% multiple times in these bull markets. So it is par for the course. Getting all the way down to 50 or even lower than that, I think it would take some kind of broader macroeconomic event for that to happen.
Well, talk to me a little bit about where you think we go from here. If we look, let's say, 12 months out, what do the markets look like to you?
Well, 12 months out, I just look at the government spending and the fiscal situation, which remains unchanged. The CBO just recently updated their projections showing that the fiscal deficit is going to come in at 1.9 trillion. So they increased it once again, another 27%. Furthermore, our interest expense topped military spending for the first time. That's a milestone no country usually likes to enjoy. And so the moral of the story is the government keeps spending. And really, when you look at Bitcoin's value proposition, it is a hedge against currency debasement. And when you look at the debt situation, when you look at how much they're still spending, you realize that one of the only ways they're going to get out of it is to debase the currency. And so you're betting that that's going to continue. And if you want, a preview of what happens here, just look at what's happening in Japan. They're kind of further along in their more accommodative monetary and fiscal policies than the United States, and their currency is currently bleeding out as they try to get those interest rates back up. And so the United States isn't as in debt as Japan. They're not as far along, but that's what happens is eventually the currency gets sacrificed. And so I think over the next 12 months, what we're going to see is you're going to see the Federal Reserve either cut interest rates or really get close to talking about cutting interest rates. And you're going to see the government continue to spend. And so in that environment, I think this is what Bitcoin's kind of been teasing out. More liquidity is going to enter the system. And Bitcoin is a liquidity sponge. It just soaks it in. And so I think we're going to see actually Bitcoin rise over the next 12 months. To what that number is, I'm not sure. I do expect it to get somewhere close to the 6-digit range in the next 12 months, though, if I had to pick a number.
You won't give us an actual number, like low 6 digits, close to those 6 digits?
No, I think it's kind of a foolish game to try to pick exact numbers. I just think it's going to go up higher than here because of those liquidity conditions. It's pretty prime for Bitcoin. Bitcoin is really just a pure bet on that, on currency debasement. And these politicians don't know how not to spend money.
Now, given what you just said, if you're looking at the crypto markets, if you're looking at the various different crypto assets, and you're thinking about how to allocate a portfolio this morning, what are you looking at? What's appealing to you given what you've just outlined?
Bitcoin. Yeah.
Only Bitcoin?
Only Bitcoin. Yeah.
I mean, yeah, you are from Swan Bitcoin, so I expected that answer from you. Now, speaking of Bitcoin, let's talk about the ETFs. Of course, we had that approval in January. There have been way more ups than downs with the ETFs, but in the beginning, I asked for your call of the day, and you said you're watching ETF outflows very closely. Talk to me about what you're seeing there.
Yeah, so the ETFs have been the most successful ETF launches of all time. I mean, it's been incredible. But up to this date, it's really just been primarily retail investors that's come from Fidelity, BlackRock, Van Eck. But the other largest, like the largest holder of ETFs right now, are these hedge funds. And these hedge funds have been putting on something called the basis trade. And what that is there's a price discrepancy between the futures and spot markets. And so they basically just short the futures, long the underlying spot, and then collect that difference, that premium. And it's an arbitrage trade. So they just keep doing that. They're rolling it over, and that premium has been really helpful for them. But that's been coming down. And so it's getting less attractive to put on that trade. And so I actually think a lot of what we're seeing in terms of the major outflows is actually perhaps these hedge funds beginning to take that trade off the table, because it's just not as enticing to them with the premium is not as large as it used to be. And so it really makes sense because the largest ETF holders have been Renaissance Technology, Millennium, and these are quant funds. And so that algorithm doesn't really care if they're trading Bitcoin ETFs. It could be any ETFs. It could be corn ETFs. Doesn't really matter as long as there's a arbitrage opportunity. And so this is what they do. And now you're seeing that premium kind of start to shrink. And perhaps these large hedge funds are beginning to kind of move on to other areas in the market that are more enticing with their capital. And so you see significant outflows over the month of June. But I do think this will change. I think the inflows will continue to increase over the next 6 to 12 months in these ETFs because, like I said, most of the early wave buyers have been retail investors. It hasn't been institutional investors like the financial advisors, the RIAs, the pension funds. We've only seen one major pension fund come out, and so I think the 13F filings that are going to come out in the next month, we're going to see more and more of these financial advisory firms, as well as maybe pension funds, other institutional investors, start to reveal exposure to these spot Bitcoin ETFs because it just takes slower for them to move and allocate. They have to do the due diligence on a new investment project. Sometimes there's compliance matters that prevents them from going in right away. And so I think you could see the second wave being a lot driven by institutional investors, which is really bullish for the long-term outlook of the ETFs and Bitcoin.
Now, I want to talk about the Bitcoin narrative, where you see it going for over the next year. We've talked already about miner selling. We've talked about the ETFs. We've talked about Bitcoin being the only asset that you would put into your crypto portfolio. What's the narrative that drives Bitcoin over, I don't know, the rest of 2024 or the next year? Is it ordinals? Is it layer twos? Do we need to be watching more closely what's going on in the Bitcoin ecosystem from a technical perspective to make that bet? What do you think?
Well, I think the narrative is there's only going to be 21 million and they keep spending money. I mean, I hate to say it, but it's a store value that can't be debased. And so it holds its value over long periods of times. And like I said, it benefits from increased liquidity in the system. And so if you're thinking about those institutional investors that I just mentioned, that's what they want to hear. They want to hear about an asset that's extremely scarce, that benefits in that environment and can actually add diversification to their portfolio. It's uncorrelated to other asset classes. And so I think that remains the primary narrative behind Bitcoin. These other like ordinals and these things, I think they're interesting. I think they're very, very early. I think we don't really know what's going to become of them. There's a lot of innovation happening on layer 2. It's not just ordinals, it's Lightning, it's BitVM, it's all these different types of things. And it's exciting, but it's early. But right now, the main thesis around Bitcoin is its ability to store value, to act as a protection against the currency debasement, and to add diversification to and enhance the returns of a portfolio. And I think that's what we're continuing to see moving forward with these institutional investors as they continue to learn about it.
Now, you mentioned the elections up at the top when I asked you for your call of the day. Crypto has become a talking point. It's yet to be seen if it will remain a talking point ahead of November. But what do you make of, actually not what do you make, what do you think of Bitcoin's role in the upcoming election?
Yeah, I actually said back in 2021, I thought that Bitcoin was going to be discussed in the presidential debates. And here we are. I think we actually might see that. And it's not really surprising to me because so many Americans own Bitcoin. I mean, it matters to them. And I haven't met anybody who hates Bitcoin as much as somebody who loves it. And so these politicians are starting to think, what's the use for me to be anti-Bitcoin? This only hurts me because if I'm anti-Bitcoin, then I might even lose voters. But if I'm pro-Bitcoin, yeah, maybe some people might get annoyed. They don't understand it, but I probably won't lose their votes. And so this is the game theory of Bitcoin playing out because you have one leading presidential candidate, Donald Trump, coming out and saying, hey, I'm pro-Bitcoin, I'm pro-crypto, vote for me. And then you have another one that really has been very hostile towards this industry over the last 4 years. I mean, that's really not even debatable. At every turn, it seems like he's made it harder for this industry to operate in the United States of America. And so I think you are going to see this continue to be a political issue because tens of millions of people are into Bitcoin, tens of millions of people, voters are into Bitcoin. And that's ultimately what these politicians care about is votes. And you have a voting base here that is very passionate and it can be very swayed. A lot of these people are one issue voters. Support my Bitcoin and I'll support you.
Well, I actually wanted to ask you about that. The concept of single issue voters. Do you think there are enough of these single issue voters who care enough about Bitcoin to potentially sway the election in November?
Well, look, I think all forecasts are showing that this election is going to be extremely close. And I mean, estimated 50 million voters, that's not a small voting block. And I do think a lot of people really care about this thing. If you look at both sides of the political spectrum, one thing that they can agree upon is that inflation sucks. They are saying inflation is the number one problem that we care about right now. And so when you think about Bitcoin in that context, yeah, I bet they really care about it because Bitcoin has been up the last 18 months basically. And it's actually helped them preserve their purchasing power at a time when prices are going up and they're really starting to feel pain. It's probably one source of hope that they look at in their portfolio that they say like, oh, this thing's actually keeping up and even exceeding the rate that prices are going up, the rate that real estate's going up. It might actually help me afford the life that I want, afford a house, afford kids. And so they care about this thing. And so if you're going to come out and be ignorant and attack it and spread misconceptions about something that is actually helping them in their lives, I think it can sway their vote and perhaps even sway the election.